This is not the easiest time to release a report on the state of global trade. But I think it's more important with the present turbulence, with the present challenges, it's even more important for us to step back and make sure we have an accurate and up-to-date view of the trade ties that connect countries around the world. And that's the purpose of our report, to provide the most convenient, most comprehensive overview of the trade landscape that we can. So what I'd like to do in this short presentation is to show you 10 images that I think tell a striking and in many cases surprising story about the shifting landscape of global trade. The first 3 images are about the growth of global trade and the potential impacts of tariff increases. The next 2 look at which countries and regions led the world in trade growth over the last 5 years and which might be the world's trade growth leaders over the next 5 years. Then we have 2 images on the shifting geography of world trade, and then I wrap up the main part of my presentation with 3 images about how geopolitics is shifting trade patterns. Then finally, since we're launching this report here in Mexico, I'll conclude with material about this country. Without further ado then, let's go to the first topic, the growth of global trade. The baseline forecast in our report, which assumes only limited implementation of the tariffs proposed by US President Trump, calls for trade to grow faster over the next 5 years than it did during the preceding decade. It predicts a 3.1% annual trade volume growth rate from 2024 to 2029. That's much faster than the growth that we saw during the last 5 years, but that period, of course, was affected by the COVID pandemic. But it's also faster than the growth during the preceding 5-year period. So if we actually see only fairly limited increases in trade barriers, fairly modest increases in trade barriers, the outlook for trade growth is actually pretty strong, pretty favorable outlook for trade growth. Under the baseline forecast, trade growth would keep pace with or even slightly exceed global GDP growth. But trade growth, of course, is affected by trade policies. And there's currently extremely high uncertainty about future trade policies. This graph measures trade policy uncertainty based on how often that topic comes up in news articles. And it's soared to a level higher than we've ever seen before since the re-election of US President Trump. And the data go all the way back to the 1960s. So what would happen to global trade growth if President Trump does go ahead with all of the tariff increases that were proposed during his election campaign, and all of the other countries around the world retaliate in turn? If that happens, that would substantially slow, but not reverse, the growth of global trade. To see why, let's start by putting up on the screen how much trade would be expected to grow over the next 5 years in the baseline scenario. Without full implementation of the Trump tariffs, we would expect there to be about 16% more trade in 2029 than there was in 2024. Now, various institutions have modeled out how much those tariffs would reduce global trade. If President Trump does go ahead with all of those proposed tariff increases, and again, as I said before, if all the other countries retaliate in turn, so that implies 60% US tariffs on imports from China, 10% on the rest of the world, the model suggests that would cut global trade volumes by 7 to 10%. That's a big reduction in global trade, but even if we take the most pessimistic end of that range and we cut our expectation for global trade in 2029 by 10%, we still have positive trade growth over the next 5 years, but much less growth than in the baseline scenario. So, with no retreat from international trade on the horizon, let's move on to the next topic then, trade growth by country and region, to see where we're going to see the fastest growth. We focus in this report on 2 dimensions of trade growth, what we call speed and scale. The speed dimension is probably what you think of first when you think of growth ranking, simply which countries are achieving the fastest trade volume growth rates. But we also care about how big the opportunities are in different parts of the world, and that's where the scale dimension comes in. This measures which countries are achieving the largest absolute amounts of trade growth. Countries that excel on both dimensions can be especially attractive because they combine fast growth with enough scale to really make a difference for a company's bottom line or for a trade partner's economic performance. Over the last 5 years, the top 5 countries on the speed dimension, the countries with the fastest trade growth, were Guyana, Armenia, the Democratic Republic of the Congo, Kyrgyz Republic, and Zimbabwe. The countries with the fastest trade growth tend to be smaller countries with sometimes unusual factors accelerating their growth. So for example, Guyana's trade growth was very fast because this is the period when Guyana initiated oil exports, and their exports just boomed as a result. Scale leaders. On the scale dimension, the top 5 countries over the past 5 years were China, the United States, India, the Republic of Korea, and the United Arab Emirates. China and the US didn't have especially fast trade growth during that period, but these two are the world's largest participants in international trade, so even when they have slower growth rates, they generate very large amounts of trade growth. India, Korea, and the UAE, on the other hand, had trade growth rates far faster than the global average, which put up their scale rankings. And when we look for the countries that are excelling on both speed and scale, looking back over the past 5 years, there were 3 countries that ranked among the top 30 for both dimensions, and those were the United Arab Emirates, Vietnam, and Ireland. That was the past 5 years. Let's turn to the future. Looking at forecasts for the next 5 years, the forecasts predict that the speed leaders will be Sudan, Zimbabwe, Georgia, Madagascar, and Guyana to have the fastest trade growth. On the scale dimension, the forecast for the next 5 years has the top 3 again in the same position. So the largest absolute amount of growth predicted to be generated by China, United States, and India. And then the next 2 coming up into the 4th and 5th places for the forecast period, we have Germany and Vietnam. And when we look at which countries are forecast to lead on both speed and scale for this period, we have 4 countries that ranked among the top 30 in the forecast. Those are India, Vietnam, Indonesia, and the Philippines. Now, on the scatter plots we just looked at, I could only name and label a few top countries. This map takes that entire analysis and presents it in just one image. What we did here is we took all of the countries of the world and we rescaled them to size them according to how much trade growth they're expected to achieve over the next 5 years. So the sizes of the countries on this map represent the scale dimension of the scatter plot, and then we colored them based on their predicted growth rates, so the speed dimension. The countries that are colored in the brightest yellow are forecast to achieve the fastest trade growth over the next 5 years, and the countries in the darkest gray are forecast for the slowest trade growth. There are a few interesting points that I'd like to highlight from that map. First, if we look at the colors, you can see that the world's fastest trade growth over the next 5 years is expected to take place in South and Central Asia, Sub-Saharan Africa, and Southeast Asia. So those 3 regions are expected to have trade growth rates in the 5 to 6% range, whereas all of the other regions of the world are forecast to have trade volume growth rates in the 2 to 4% range. So we're expecting the fastest trade growth to be in South and Southeast Asia and in Sub-Saharan Africa. But now let's look at the sizes. When we shift focus from the colors to the sizes, the scale dimension on the map reminds us that there's a lot of trade growth that's likely to happen in slower growing countries and regions. East Asia and Pacific is forecast to have 34% of the world's trade growth, but Europe is very close behind, with 30% of the world's trade growth forecast to happen in Europe. North America follows third, with 14% of the world's trade growth expected to happen in this region. Summarizing by income level, we expect 58% of the world's trade growth to happen in high-income countries and 42% in low and middle-income countries. Moving on to our next topic then, the shifting geography of world trade. By far the biggest change in global trade patterns that we've seen over the past century has been the rise of China to become the biggest participant in international trade. But it's important to keep in mind that China's share of global trade is not continuing to rise. It soared from about 4% back in 2000 all the way to a peak of 14% during the COVID pandemic before slipping back to 13%. And the forecasts predict that China's share of world trade is going to remain at 13% through 2029. As China's share of world trade rose, unsurprisingly, the EU's share and the US share both declined. But what I think is interesting to note is that those declines actually ended about a decade ago. So these three major economies' shares of world trade have actually been pretty stable recently, and they're forecast to remain stable moving forward. At the level of major world regions, the story is basically the same, with fairly stable shares of world trade across regions recently and in the forecast period. We are expecting a small increase in the share of trade happening in East Asia and Pacific. That's driven mainly by growth in Southeast Asia. And it's a little bit hard to see on the graph, but there's been a big increase in the share of trade happening in South and Central Asia over the past decade. That's driven mainly by growth in India. The other geographic topic that I'd like to highlight here is the question of regionalization. There's a lot of interest now, of course, in nearshoring and producing goods closer to customers. Globally, however, the data actually show the opposite story. This yellow line is the average distance in kilometers traveled by all trading goods around the world, and it's increased to a new record last year of about 5,000 kilometers. So trade is happening over longer distances, the opposite of what you would expect if it was becoming more regional. And so unsurprisingly, the gray line here, the share of world trade happening inside roughly continent-sized regions, has been declining in recent years, and the most recent reading puts it at a new low of 51%. There is, though, one really important exception, which happens to be where we are today, North America. In North America, we do have recent evidence of an increase in regionalized trade. So this is for the countries of Mexico, Canada, and the US. We treat as North America. The yellow line here shows that those countries on average have been trading over shorter distances, and meanwhile the gray line confirms that a rising share of North America's trade was happening inside the region between 2020 and 2023. But the little dashed lines, dotted lines, show us that that pattern actually reversed a little bit in 2024. We saw a little bit of a move away from regional trade in 2024. So we're going to have to watch it to see, are we going to continue to see that regionalization trend resume for North America or not? We'll be watching it very closely moving forward. And I think one of the key factors is going to be whether or not we ultimately see the sustained imposition of tariffs on the trade that happens within North America or not. So we'll have to watch that. But it's time now to move on to the final major topic of the presentation, from geography to geopolitics. Here we'll look first at the US and China, then we'll broaden to close allies of the US and China, and finally we'll take in the entire world. So starting with the US and China, this graph, which has been widely reported elsewhere, tracks the share of US imports that comes from China. That's declined from 22% before the start of the US-China trade war all the way down to 13%. But I think it's a mistake to actually conclude that there's been a meaningful decoupling between the US and China. We explain 3 reasons for that in our report. Here I'll just highlight one of them. One of the important limitations of this standard way of looking at US-China ties is that it only tracks the amount of imports coming directly from China into the US. It ignores all of the value of goods produced in China that goes through other countries and ultimately finds its way into the US. To try to address that, we added this gray line in our analysis this year, and what that does is it tracks the estimated share of all of the foreign content that's used in the US economy, how much of all of that content originated in China, regardless of whether it came into the US directly or if it was an input to a good that came into the US from another country. And strikingly, what we see is that after a spike during the COVID pandemic, there's been no sustained decline in this broader measure of US reliance on goods from China. Okay, now that was US and China. Quickly, let's move on then to a broader possibility of a split between close allies of these countries. So, recent studies published by the IMF and the WTO have reported that there is early evidence of a fracturing or a fragmentation of the world economy along geopolitical lines, with less trade happening between geopolitical rivals. And these institutions have warned that if that continues, it could have severely negative economic consequences. To analyze that, we use a classification of countries into groups of close allies that was developed by Capital Economics. And the analysis only looks at groups of close allies. Mexico, for example, doesn't appear on either of those sides here because Capital Economics classifies Mexico as a country that leans toward the US, but not as a close ally of the US. This chart analyzes that possibility of a split between rival blocs of close allies. So are we seeing a split of the world economy into separate blocs? What it does is it tracks how much trade happens between groups of close allies relative to how much trade happens within those groups. If that line goes down, that's evidence of fragmentation because less of the world's trade is crossing between the blocs. Indeed, we did see that line went down in 2022 and 2023, mainly because of effects of the war in Ukraine, but there was no further decline in 2024, a development that has not yet been reported elsewhere. So that suggests to us that actually the reorientation of trade flows due to the war in Ukraine largely played out by the end of 2023, and it's an encouraging finding because we heard in a moment ago those warnings that if that line keeps going down, that could be quite bad for the world economy. It's reassuring that that line flattened out over the past year. Okay. Finally, I want to take all of what I just showed you and put it into global perspective. So I want to wrap up with a chart that takes all trade around the world and splits it up into how much was between the US and China, between versus within those blocks of allies, and then with countries that are neither close allies of the US nor of China. So this is going to be all trade around the world. It will sum to 100%. Starting at the bottom of the chart, the share of world trade happening directly between the US and China has fallen from 3.5% in 2016 to 2.6% last year. So while US-China tensions tend to dominate the headlines, this is actually a pretty small part of world trade, and the decline is less than 1 percentage point. Here we have our rival blocs. So trade between rival blocs of close allies is down from 12.7% to 10.6%, but a big part of that was simply the reorientation of Russia's trade following the war in Ukraine. If we take Russia out of the analysis, this is again just less than a 1 percentage point shift in global trade patterns. So at the bottom of the chart, we put all of that trade that's between geopolitical rivals. It's a pretty small part of world trade, and it's a part with pretty small shifts. Now, at the top of the chart, we do the opposite. We take the amount of trade that happens within those blocks of close allies. So this is trade between especially friendly countries. That's actually 4 times more trade than happens between the geopolitical rivals. And trade within these blocks is actually a stable part of world trade. So it's much bigger, but it's not increasing. So we actually don't see a turn toward more trade happening within these blocks of close allies. Instead, where's the growth? It's with the countries that are neither close allies of the US nor of China. These countries such as the UAE, Vietnam, India, Brazil, and Mexico, these countries are trading more with both blocs, and they're often intermediating trade between the two blocs. So the takeaway I would take from this in big picture terms is that we're actually still very far away from a complete split of the world economy into 2 separate and disconnected blocs. And I think that's a good note on which to end this little tour of 10 images about the shifting landscape of global trade. To summarize the key points, on global trade growth, the baseline forecast is for faster trade growth over the next 5 years. And I think it's reassuring that even if we had full implementation of all of the tariffs proposed during the Trump campaign, trade would still grow, just at a much slower rate. At the country level, India, Vietnam, Indonesia, and the Philippines are forecast to lead on both the speed and the scale of trade growth over the next 5 years. On geography, we see stable shares of world trade across major world regions, and only a clear recent evidence of regionalization increasing here in North America. At the level of the world, we have a record high average distance over which goods are traded, and a record low share of trade happening inside regions. Finally, geopolitically driven shifts in international trade patterns are still small, and there's no continuing separation between blocs of allied countries during the past year. There's a lot of other content available in the report. There's material on the mix of goods traded by type of product. There's material on trade and economic context where you can compare trade to domestic business activity by sector and by country. And there are also one-page profiles of about 200 countries' trade patterns. Also, as a new feature of this year's report, we have interactive versions of many of the charts available online, where you can actually customize the analyses by type of product traded, by country or by region, and you can download the data and the chart images. Finally, since we're releasing this year's report in Mexico, we also prepared a short leaflet expanding on Mexico's country profile. It highlights how Mexico is currently the world's 9th largest participant in international trade, and in our baseline forecast, Mexico is predicted to achieve the world's 7th largest increase in trade volumes over the next 5 years. Those results follow a really remarkable period during which Mexico reduced its tariffs, increased its trade to GDP ratio, and developed one of the world's largest networks of free trade agreements. And that contributed to Mexico's growth as a manufacturing center. Manufactured goods have risen to about 80% of Mexico's exports. Another unique feature of Mexico's trade pattern is that among major economies, Mexico is the one with the largest difference between the average distance over which it exports versus its imports. Mexico exports over a relatively short distance because about 80% of the exports go to the U.S., but Mexico imports over a much longer distance because goods come into Mexico from a much wider variety of countries, and that imports average distance has been going up as Mexico has been importing more from China. Mexico's focus on exporting to the U.S. also leads to states along the northern border, all ranking as the states that lead in terms of exports in Mexico. But we replicated that speed and scale analysis we did for countries at the level of Mexican states, and it highlights how several of the fastest growing exporting states in Mexico are actually located further south away from the U.S. border. So if you want to know more, I would invite you to take a look at our Mexico Trade Highlights leaflet. And with that, I will wrap up and look forward to your questions. Thank you very much.